Good morning. I welcome you to this week's market brief. My name is Victor Alui, and I'm the head of investments at Sankore Global Investments. We start off in the US, where the market ended the week in positive territory, with the S&P 500 hitting another record high at above 5,100 point mark. We also saw the Dow hitting a new record high as it closed above the 39,000 point mark. For Friday, the S&P was up slightly by 3 basis points. The Dow added 16 basis points, while the Nasdaq lost about a third of a percent. Now, for the week, all the averages recorded a positive week or a winning week. The S&P added 1.66%. The Dow was up 1.3%, while the Nasdaq gained 1.4%. I mean, Nvidia's blowout results continue to prove to be a significant support for the market. Also, continued signs that the economy remains really resilient. These two factors basically provided significant support for the market last week. Going into this week, the PCE data, which essentially is the Fed's preferred gauge for inflation, is due out on Thursday. That is likely to serve as a barometer really for near-term investor sentiments. Also, we still have earnings coming through this week, although earnings season is winding down. We believe that some of those results that will come out will also provide some near-term direction, if you will, for the overall market. Seeing particularly as the market is up about 20% from its October 2023 lows, we are likely to see some pullback anytime soon, particularly if we see a hotter than expected PCE number on Thursday. That is likely to create, take the sting out of the momentum that we really have seen, thus far. Coming to our local markets, really, we saw, GDP numbers released last week, GDP for Q4 of 2023. That number came in at 3.46%. This was basically higher than the fourth quarter of last year, really, of 2022, which was 2.54%, but lower than the 3.52 that we had seen, in the third quarter of last year. I mean, performance was really driven by the services sector. It contributed about 3.98% to GDP, and also basically accounted for about 50% of aggregate, output for the economy. In terms of, share of GDP as well, we saw the agri and the industrial sector also even grow more in terms of what they contributed to GDP than what they did in the fourth quarter of 2022. And I'm moving over into the fixed income markets. T-bills basically maintained a bearish tone last week, particularly as, participants looked to the outcome of the PME auction that happened midweek. There was some demand, particularly after the close of that auction. However, that demand basically waned as liquidity grew thinner. In all, yields expanded an average of 83 basis points across, the T-bill yields curve. The DMO, over to the bond market, basically DMO conducted an auction last week Monday, where it basically sought to raise about 2.5 trillion, ended up getting bids of about 1.9 trillion, and then selling about 1.4 trillion. The 7 and the 10-year new papers, which it issued, basically closed at 18.5 and 19% respectively. And this basically led to an upward repricing of yields across, the curve. In all, yields expanded by about 30 basis points across the curve. For this week, the Monetary Policy Committee is having its meeting starting today, and it should end tomorrow. The overall and overwhelming expectation is that we would see a significant increase in the monetary policy rates. What that does to fixed income yields, really remains to be seen, particularly because we expect that all of that expectation really about an increase in the MPR has been priced into the fixed income markets. We are likely to see a knee-jerk reaction if we see a really significant increase in the monetary policy rate, but we don't think that it would be sustained because, this has been largely priced into the fixed income market. That's pretty much it for the week. We do hope that you have a very, very productive week ahead. Thank you very much.